Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, October the 20th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A little bit of economic data across the pond. We got retail sales in Great Britain came in unchanged, which was lower than the expected 0.3% increase. We also got an ECB press conference going on over there earlier this morning. Here in the United States, we had Philly Fed Manufacturing Index surprised the upside at 9.7, was expected to be 5.2. But on the flip side, we got unemployment claims increasing a little bit at 260,000, expected to be 251,000. So that a bit of counterintuitive, if you will, for the Philly Fed. We also got Fed member Deadly speaking today, and then existing home sales surprised the upside at 5.47 million units versus the expected 5.36 million units. Also, we got the natural gas storages came in at 77 billion cubic feet in storage, which was a build of about 5 billion cubic feet from the expected 72 billion cubic feet, which what the analysts thought. So anyway, the overall markets, we've got quite a mixed bag going on here right now. We've got crude oil down. We've got some indexes up on the day, and like the Dow Jones and the mini S&P and NASDAQ were down last as I was starting this. But as you can see, crude oil down about $1, trading at $50.84 for the most part. And then we got then we're onto gold /GC is down over a couple bucks right now and back below that 200-day moving average, which I've been talking about quite a bit lately. It's just bouncing back and forth along that line. Then onto the bonds. Bonds up about a half a point, up 16 ticks. Went up there and tested that value area, the point of control, if you will, and has since come back off of that. But it is really a kind of a stretched out value area because the most time has been spent right where we're at now. The most volume is spent right there where the 200-day moving average is. So the bonds back above that 50 Fibonacci level, which is acting as quite a bit of support. I mean, it's broken below that on a daily basis, but has finished above that in the last couple of sessions. This is what I'm talking about with the Dow Jones Industrial Average up slightly by almost 19 points, 18 and change. But again, right there at the 200-day moving average, which will also act as resistance. Then onto the NASDAQ, down on the day just by about 4 points. It's been quite a bit of a ride, even though it's a tight range. We've had about a 15 or so tick range in just a matter of minutes, but it came down there, tested the point of control where the most time and volume has been spent, getting really comfortable here. May have before we were seeing this as the support resistance area. I still think that is the case. It's acted as support again today. On the mini S&Ps, only down about $1 and change, and went up and tested that 200-day moving average and since was repelled. If we look at this on the daily 15-minute bar chart, we can see right here is where it went up overnight and tested that resistance area. The overall market is just slumped. On the economic data, we really kind of fell off a little bit, then rebounded again all the way to the lows, and it just seems like that is the case for today. Is everybody's jockeying back and forth. Some of these everybody getting ready for earnings for the most part. eBay is one that I entered yesterday. I did it really late in the day and actually forgot to tweet it out. But in eBay, I went in there and did a strangle, and I did the, I did the eBay strangle. I did the October 29.5 puts with the 35 calls to create that strangle, and I did it for 53 cents yesterday. And as you can see, it went down there and tested my puts, covered it early this morning before it really fell off, but I covered it back for 52 cents, so scratch for all intents and purposes. But I didn't have a real directional assumption. I didn't think it would move outside that market maker move, or the expected move, if you will, and it did. And we've had a couple of these this earnings season move outside of that expected range. So that's good in a sense, because we're getting those probabilities early, where it is the rarity. So that should be smooth sailing for the rest of earnings, hopefully. So as probabilities are probabilities, they should play out in the end. So hopefully they play out in the end with the ones that I'm playing, that they stay inside that expected range for the foreseeable future. Then on to LULU. I just talked about this one yesterday. I put this trade on yesterday early in the morning and decided to cover it. I almost covered it yesterday because basically I was at 30% of my max profit on that, and it just seemed like, you get that kind of move in one day, and that is beating the probabilities. I decided to squeeze it out one more day to see what would happen, and decided to cover it today when it just couldn't go above yesterday's high, and went into the November yesterday, if you remember, and sold the 52.5 puts for 59 cents. I bought them back this morning for 40 cents. So about a 33% profit on that in one day. You can't shake a stick at that, you guys. I mean, that's what you have to do when you can beat the probabilities. And I talk about this in my webinars, even on just the short puts. If you get a certain percent of profit within a certain amount of days, you have to really stay mechanical and get out of that. That's, tomorrow it could blast off higher, and I could cover that for better than 50% of my max profit, but I am not willing to play those probabilities, because that becomes more of a gambling kind of mentality then. Also with Lululemon, it's been in a bearish trend. I was playing the contrarian move. We also just got this crossover, which is some people still call it, I think, like a golden cross, where when you get the 50-day moving average moving below the 200-day moving average, that is a serious sign of bearish trend, and look out below for the most part. So whether or not that's true, we'll have to see, but it does not look good for Lululemon. I might even look to flip that trade around and sell some calls in there, because it still has some pretty decent implied volatility, and I have a whole month left in that trade. So that's what I'm going to be looking at doing there, maybe this afternoon. The other thing we have is McDonald's has earnings today, and I have a feeling that is going to surprise to the downside. And with Microsoft, again, stuck in a trading range. I think I might be playing Microsoft to the upside. I think there's been a lot of people getting into the gaming computers, and the PC is not necessarily dead. So I'm going to be looking to play Microsoft to the upside. So follow me on Twitter at Wolfman's blog. I'll be tweeting those out. Hopefully I don't forget again today, but I'll tweet out what I'm doing in those trades for the earnings. Tomorrow's webinar is going to be on long strangles. So I don't do a whole lot of those, but I'm going to be talking about ways to implement that strategy in order to increase your probabilities of profit going forward. All right, so go to protraderstrategies.com, sign up for that, and if you can't take that, take it easy.